What is up, everyone, and welcome back to Explain the Charts. Today is October 2nd, 2025, and we have some massive price action to cover for Bitcoin. As usual, we'll start by breaking down the latest news headlines impacting the market, and then we'll dive deep into the charts to see what the technicals are telling us. The big story today is the surge in price, with headlines celebrating a strong start to Uptober as Bitcoin jumped to $117,000 and is pushing towards $118,000. Many analysts are suggesting this rally clears the path for Bitcoin to chase new all-time highs, with some even identifying $122,000 and $138,000 as the next major resistance levels. Several macroeconomic factors are contributing to this sentiment. The potential U.S. government shutdown is being called a non-event, or even a bullish catalyst for crypto, with many seeing any resulting dips as buying opportunities. Furthermore, weak U.S. jobs data and futures pricing that indicates a 91% chance of a Fed rate cut in October are adding liquidity expectations to the market, which is typically good for risk assets like Bitcoin. On the institutional side, we're seeing continued acceptance, with major firms like BlackRock recommending portfolio allocations to Bitcoin and the ongoing trading of Bitcoin ETFs in the U.S. However, it's not all one-sided. Some analysts are still warning of sharp corrections ahead, with bears eyeing a support zone between $104,000 and $107,000. There are also regulatory crosswinds, with the EU moving towards a stablecoin ban and Poland passing a controversial crypto law, which could create uncertainty. One very important piece of news from a technical perspective is that Bitcoin's recent rally has successfully closed a significant CME gap that spanned from $107,000 to $116,700, which is often seen as a prerequisite for sustained price stability and further upward moves. Now, let's pull up the charts and see how this all translates into price action. Here on the daily chart, we can see the broader story of the past year. After a massive run-up that peaked in mid-July around $123,000, we saw a significant correction, finding a bottom near $109,000 in late September. That peak around $123,200 is our major all-time high resistance. The key level bulls need to break for a new bull market continuation. The lows we made in early July around $53,000 and the flash crash low in August near $49,000 represent the most significant long-term support zones, though they are far from the current price. More recently, the price has been consolidating in a large range, but this recent move is a significant breakout attempt. Let's zoom in on the price action since September to get a better look at this reversal. Focusing on the last month, we can clearly see the sharp drop in late September from around $116,000 down to the key support level near $109,000. This correlates directly with the news we saw about over $1.5 billion in long positions being liquidated, which flushed out leverage from the market. What followed is the massive green candle for October 1st, where the price surged nearly 4.1% from an open of about $114,000 to close near $118,700. This powerful move confirms the Uptober narrative and signals strong buying pressure, likely fueled by the institutional whale buying that was reported during the dip. This single candle also decisively moved the price through the CME gap resistance, turning that entire zone into a potential new area of support. The close near the day's high suggests momentum is still strong, but let's switch to a lower time frame to analyze the most recent action. Looking at the 15-minute chart for October 1st gives us a granular view of the explosive move. We can see the price was consolidating around the $114,000 level in the early hours. The real explosion happened around 8:30 Universal Time Coordinated, with a series of incredibly strong bullish candles that took the price from $115,000 to over $118,000 in just a couple of hours. After peaking just above $118,800, the price has entered a consolidation phase, trading in a tight range for the latter half of the day. This indicates that after the initial surge, buyers and sellers are now finding a new equilibrium. For short-term traders, The intraday high around $118,800 is now the immediate resistance to watch. Support has begun to form in the $118,100 to $118,300 range, where price has been holding for several hours. A break below this short-term support could see a retest of the $117,500 area, but for now, the price is holding firm at these new highs. Let's switch back to the daily chart to put this all into perspective for our final analysis. So, back on the daily chart, we have a clear picture. Bitcoin has shown immense strength, breaking out of its recent downtrend and establishing a potential new support base above the old CME gap. The bullish case is straightforward from here. If buyers can hold the price above the $117,000 to $118,000 level, the next logical target is the all-time high of around $123,200. A breakout above that level on high volume would signal a strong continuation of the bull market, entering a phase of price discovery where analyst targets of $138,000 and higher become much more likely. The bullish sentiment is reinforced by positive macro expectations like a Fed rate cut. On the other hand, the bearish case hinges on a rejection from this current resistance zone. If sellers step in and push the price back below $117,000, it could signal a failed breakout or a bull trap. A drop below the psychological level of $114,000 would be the first major warning sign. A more significant bearish confirmation would be a break below the late September low of around $109,000, which would likely lead to a retest of the $104,000 to $107,000 support zone. To recap, let's go over the key levels and potential scenarios. The critical support levels to watch are $117,000 on the short term, followed by $114,000 and the major support at $109,000. The primary resistance is the recent high around $118,800, with the ultimate target being the all-time high near $123,200. So, what are the likely scenarios? I believe the most likely scenario, with about a 60% probability, is a period of consolidation between $117,000 and $119,000, followed by a test of the all-time high. The current momentum, the Uptober narrative, and the CME gap closure all support this bullish outlook. A less likely scenario, maybe 30% probability, is a rejection from this zone, leading to a healthy pullback to the $114,000 area for consolidation before another attempt higher. This would be typical profit-taking after such a strong move. Finally, a sharp reversal below $109,000 seems unlikely right now, perhaps a 10% chance, and would require a significant negative catalyst like unexpected bad regulatory news. Keep an eye on trading volume for confirmation of any breakout or breakdown, as well as upcoming announcements from the Federal Reserve. That's our analysis for today. Thank you for tuning in to explain the charts. Please remember, this is not financial advice. The cryptocurrency market is extremely volatile, and you should always do your own research before making any investment decisions.